Welcome back to Investing Talk Podcast.
Today we're looking at Oklo.
Oklo. Okay.
And I have to say, looking at this company, it feels a bit like
Yeah.
you're standing on a fault line.
Uh-huh.
But instead of an earthquake, you're watching the collision of the two most powerful forces in the global economy right now.
Okay. You've got my attention.
On one side, you have the absolute bleeding edge of advanced nuclear fission. I mean, it's stuff that sounds like science fiction. And on the other side, just crashing head-on into it, is the insatiable, just desperate energy hunger of the AI boom.
It is definitely a heavy hitter of a topic. And frankly, it's one of the most polarizing stocks we've looked at in a long, long time. You either see the future of civilization or, you see a money pit.
That is a very fair assessment. And to really set the stage here, we have to understand that Oklo isn't just another, boring utility play.
No.
This isn't your grandfather's power company. This is backed by Sam Altman through Hydrazine Capital.
Right. The big name.
That part is key because it tells you to view this not as a slow-moving infrastructure play, but as a piece of tech infrastructure.
Yep.
It has that aggressive Silicon Valley DNA. But, and this is the massive tension at the heart of the story, we are looking at a company with a market cap hovering around $12 billion.
Right. That is a big number.
It is massive. And yet, they are pre-revenue.
Which is the polite boardroom way of saying they haven't sold a single watt of electricity yet.
Exactly. A $12 billion valuation with zero sales. It is a high-stakes bet, plain and simple.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep these coming. Okay, let's get into the nuts and bolts here. We have to start with the elephant in the room, which I just alluded to, the revenue status. Or maybe the lack of a revenue status.
It's the most important starting point. We can't just gloss over it.
We are looking at a company that is strictly pre-commercial. I've combed through the 10Qs and the 10Ks, and it is zeros across the board for revenue. This isn't low revenue. It is no revenue.
Correct. And that changes how you have to analyze it,
It means talking about profit margins is essentially a theoretical exercise at this point. They're non-existent. The entire financial story right now is about operating costs. They're just burning cash to scale up, hire nuclear engineers, and fund R&D.
Right.
So for a value investor who is used to looking for, PE ratios or steady dividends, you might want to cover your ears. This is a different beast entirely.
It is, but you have to look at how they're funding that burn. Context is everything here.
Okay.
If you look at the financial health, it's actually remarkably robust for a pre-revenue company. They have what I call a fortress balance sheet.
Fortress is a strong word for a company that's losing money. How do you justify that?
Well, think back to the SPAC merger in May 2024. That event was pivotal. It netted them $306 million in gross proceeds.
Which is a huge war chest.
It's a massive war chest. It's not just pocket change. It's enough capital to do serious work. But here is the crucial detail that makes me sleep a little better at night.
What's it?
Zero debt.
Now, that is incredibly rare for a capital-intensive infrastructure build. I mean, usually building power plants means leveraging yourself to the hilt. You see massive loans.
Exactly. They have no debt service eating into that cash pile. So yes, the free cash flow is negative. They are burning money. But it's intentional burn. They aren't burning money on Super Bowl ads or anything frivolous. It is strictly reinvestment into reactor development, building out the fuel recycling infrastructure, and, cementing partnerships, like the recent one with Nucleo.
So the burn is fuel for the engine, literally and figuratively.
Precisely.
But let's play devil's advocate for a second. $300 million sounds like a lot of money to you and me. But in the nuclear world, where cost overruns are legendary, that can vanish pretty fast. Does this actually get them to the finish line?
It gets them a long way. The balance sheet stability essentially buys them the runway they need to execute toward their 2027 deployment goals without constantly needing to dilute shareholders every 6 months.
Right. It prevents that death spiral financing.
It totally prevents that death spiral we see in so many speculative tech stocks where they have to sell shares at rock bottom just to keep the lights on. Oklo isn't in that position.
Okay, that's the money. Let's talk about the machine. What are they actually building? What is the competitive moat here? Because nuclear reactor sounds like a commodity to me. If I'm a data center, why do I care if the electrons come from Oklo or Duke Energy?
Because Oklo isn't selling commodity electrons from the grid. They're selling energy independence. The technology is the Aurora small modular reactor, or SMR.
And just so everyone is on the same page, these aren't the giant concrete cooling towers you see in The Simpsons, right?
No, far from it. Those old light water reactors are massive, custom-built construction projects. The Aurora is different. These are compact units. The specs are impressive, outputting anywhere from 15 to 75 megawatts electric.
Okay.
But the killer app here isn't just the size, it's the fuel. The Aurora is designed to be a fast reactor.
Explain that. What does fast reactor mean for the business model?
It means it can run on recycled nuclear waste. It uses the energy left over in used fuel that traditional reactors just can't process.
Which essentially solves two massive global problems at once. You get carbon-free power, and you reduce the stockpile of nuclear waste that everyone is, afraid of.
Exactly. It turns a liability into an asset.
Yeah.
And it has a 10-year fuel cycle.
10 years.
Imagine installing a battery that runs a massive data center for a decade without needing to be refueled. You install it, turn it on, and walk away for 10 years.
Wow.
That creates incredibly high switching costs. Once an off-grid data center installs an Oklo reactor, they're going to switch to a competitor next year. It's incredibly sticky.
And that's the primary use case, right? Off-grid data center.
That's the sweet spot. We know the grid is congested. In places like Virginia or Ohio, AI data centers need massive amounts of power. And they are being told by the utilities, sure, we can hook you up in 5 to 7 years.
Which is a lifetime in the AI race.
It's an eternity. Oklo's value proposition is that they can bypass the grid entirely.
Yeah.
They bring the power plant to the data center.
But we have to talk timelines because 2027 is the target for commercialization. That feels aggressive for nuclear.
It is aggressive. They are targeting that 2027 date at the Idaho National Laboratory for their first powerhouse. However, they aren't starting from scratch on regulation.
Okay.
They actually received the first advanced reactor site permit from the DOE way back in 2019. So while they have hurdles, which we will definitely discuss, they have a regulatory lead that is hard for a startup competitor to replicate. They've been in the trenches with the regulators for years already.
Okay, that's the story. But let's pivot to the charts and see how the market is actually reacting to all this potential.
Yeah, it is fascinating to watch the momentum here. You really have to contextualize Oaklo within the broader nuclear renaissance.
Right.
If you look at the VettaFi Nuclear Renaissance Index, it's up over 35% year-to-date as of early 2026.
That is a massive move for an energy sector. I mean,
Yeah.
usually utilities move like molasses. You buy them for safety, not for growth.
It's huge. And the driving force is clearly sector rotation. Investors are realizing that AI isn't just about NVIDIA chips and Microsoft software. It's about electricity.
It's the power grid.
An AI query takes 10 times the power of a Google search. Training these models takes small cities' worth of power. So there is a massive rotation of capital moving out of pure tech and into clean energy plays specifically to satisfy that AI power demand.
And Oaklo seems to be the poster child for this shift. I've noticed a distinct narrative flip recently.
Oh, absolutely.
For a long time, the narrative was speculative SPAC. It was risky, unproven, a gamble, but that changed. And we can pinpoint exactly when it changed. It was the partnership with Meta.
That was the catalyst, no doubt about it.
The moment that 1.2 gigawatt deal was announced, the market stopped looking at Oaklo as a science project and started looking at it as a real contender. That deal is the fundamental support for these higher highs we are seeing in the stock price. It put a floor under the speculation.
And you can see that in the volume and flow data.
Right. The volume is still high, which usually implies retail speculation, but the type of interest seems to be shifting.
It is. Institutional interest is waking up. It's moving from pure hype, retail traders gambling on a ticker symbol because Sam Altman is involved, to reality. The prepay funding structures in these deals de-risk the timeline significantly. Even though we were looking at a long horizon all the way out to 2034 for full scale, the smart money is starting to position itself now because the validation is there.
It's less of a gamble, more of a long-term investment.
Checking the market mood, let's dive a little deeper into that sentiment because the Meta deal really is the sun that everything else is orbiting right now.
It's the headline that won't go away, and for good reason.
So let's look at the Meta factor. This isn't just a handshake agreement or a memorandum of understanding. That doesn't mean anything.
Which we see all the time.
All the time in the green energy space.
Yeah.
This is different. We are talking about a massive power campus in Ohio. The target is 1.2 gigawatts.
Just to give the listener some scale, 1.2 gigawatts is roughly the output of a full-size traditional nuclear plant. It is an enormous amount of power for one single client.
It's city-size power. And the key details are what drove the sentiment shift. It includes prepayments.
Repayments.
That means cash in the door before the electrons are even flowing.
Which is huge. It's non-dilutive capital.
Exactly. And the rollout is scheduled for that 2030 to 2034 window. That gives the market a concrete timeline to model out cash flows. Before this deal, the timeline was someday. Now it's on a calendar.
And that concreteness is what triggered the analysts. I'm looking at the recent activity here in early 2026, and it's a sea of green.
Who's jumping on board?
Well, just recently, on January 28th, Texas Capital Securities initiated coverage with a buy rating.
A fresh vote of confidence.
Before that, January 21st, Bank of America Securities issued an upgrade. And mid-January, right after the Meta news dropped, Seeking Alpha saw a flurry of upgrades. The analyst community is basically chasing the validation that Meta provided. They are saying, if Zuckerberg trusts them, we should too.
It's validation cascading through the system. And we have to reiterate the institutional backing, because it's not just banks. It's the visionaries.
The smart money.
Sam Altman, Dustin Moskovitz. These aren't people who invest for a quick 10% gain. They are betting on paradigm shifts. They are betting on the future of compute. We're also seeing institutional accumulation in the ETFs.
Right.
If you look at URNM or NLR, they are scooping up shares. That tells you the broad market is betting on nuclear as a theme, and Oklo is a key holding in those baskets.
But where there's smoke, there is also the rumor mill. What are the whispers?
The chatter is getting loud. The obvious question is, if Meta is in, who's next?
The other hyperscalers.
Exactly. Could the Meta deal expand? Are Microsoft or NVIDIA looking at similar contracts? We know Microsoft struck a deal to restart 3 Mile Island, so they are clearly nuclear hungry. There's a lot of speculation that Oklo's off-grid solution is perfect for the kind of sovereign AI clouds these companies are building. They want control over their power, and Oklo gives them that.
So we are watching for those headlines.
That, and we are closely watching the NRC. Any updates on the Aurora licensing resubmission will be a massive mover for the stock.
Now, let's look at the dangers, because I'm getting a little too swept up in the hype here. We need to ground this. I have to play the heavy skeptic. We simply cannot ignore the no-money problem.
There's a problem.
And a big one.
We are talking about a $12 billion market cap. $12 billion. For a company with zero sales, that valuation multiple is...
Well, it's infinite. It's undefined. You are paying a premium for execution that hasn't happened yet.
It is absolutely priced for perfection. Any stumble, and that valuation compresses rapidly.
And the timeline risk is real. We keep talking about the Meta deal, and it's great, but revenue from that is a long game. We're talking 2030, 2034. That is 4 to 8 years away. That is a lifetime in the market.
It really is.
A lot can go wrong in 8 years. Technology shifts, policy changes, management turnover. What if fusion has a breakthrough? What if battery tech makes solar baseload viable?
That's fair. The opportunity cost of capital is real. You could put that money elsewhere for 8 years and get a guaranteed return.
And speaking of policy, let's not forget the regulatory history. It hasn't been a smooth ride. We have to remind the listener that the NRC, the Nuclear Regulatory Commission, actually denied Oklo's license application previously. They got a no.
They did. That was a significant blow.
And it wasn't just a paperwork error. The NRC cited a lack of information on safety systems. Now they're resubmitting, they're working through it. But in the nuclear industry, regulatory approval is never, ever guaranteed.
Never.
One safety concern, one policy shift in Washington, and that timeline gets pushed back by years. And with a burn rate like this, delays are deadly.
I agree. Those are the valid bear cases. The regulatory wall is the highest wall they have to climb. But I have to offer the counterbalance on the execution risk.
Go ahead. Why should we look past that stumbling block?
You have to look at the de-risking factors. Yes, the timeline is long, but the Meta prepayments act as a bridge. It's non-dilutive capital. And that strong cash position we talked about earlier, the liquidity, that is their survival kit. They have the money to survive the burn rate and fight the regulatory battles. They aren't running on fumes, which gives them the staying power to get the license right this time.
So they have the oxygen to climb the mountain, even if it's a steep one.
Exactly. And the NRC is under pressure from Congress to modernize. They want to approve advanced reactors. They just need the data to be right. The political will is there in a way it wasn't 10 years ago.
All right, we've looked at the dream and we've looked at the nightmare. Let's pivot to the final verdict. Where do we land on Oklo?
I've crunched the numbers, looked at the tech, and weighed the momentum. I'm giving this a bullish score of 8 out of 10.
8 out of 10. That is high confidence for a pre-revenue company.
It is. But here is the thesis. Oklo has a genuine moat. The Aurora SMR technology is unique. It solves the waste problem and the power problem simultaneously. They are positioned to be the prime power supplier for the single biggest growth driver in the economy, the AI and data center boom.
It's the ultimate picks and shovels play for the AI age.
Precisely. Big tech has a mandate. They need baseload power that runs 24/7, and it has to be carbon-free. Solar and wind can't do it alone because the wind doesn't always blow and the sun doesn't always shine.
Right.
Batteries aren't there yet for that scale.
Right.
Nuclear is the answer, and Oklo provides it off-grid, bypassing the interconnection queue nightmare that is stalling everyone else.
But let's be clear about the time frame for the listener. This is critical.
Yes.
This is not a quick flip. Do not buy this expecting to sell it next week for a quick profit. This is a multi-year hold. You are buying this for the commercialization in 2027 and the rollout in the 2030s.
Absolutely. It requires patience. If you can't handle 20% swings in volatility, this isn't for you. This is for the investor who wants to own a piece of the infrastructure of the future.
So the final call is, the risks are execution-based. Can they build it? Can they license it? But the partnerships and the regulatory head start provide a buffer that makes the risk-reward ratio look attractive.
That's the bottom line.
Well, that wraps up our look into Oaklo, a fascinating blend of atoms and algorithms. As usual, before we sign off, please subscribe, like, and comment on the video. Let us know, are you buying the nuclear hype, or is the timeline too long for your portfolio? We'll see you in the comments.
Thanks for listening.